You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network, upon which so many of you have been binging throughout the week. No content on Monday, obviously closed for the MLK holiday here in the U.S., but we made it up for you. Content hitting you multiple times throughout the rest of the week. Remember, you like what you hear, Volatility Views, any of those other shows, make sure you keep rating and reviewing our stuff wherever you get this content. Obviously, we've been doing this for a long time, but there's been a huge influx of new people over the past year. So give them a place to turn in these troubled times. Leave those comments, those ratings, those reviews, wherever you get the show. Could be our app store. You know, you get our app. Could be the Apple Podcast. Could be Google Podcast. Wherever you get it. Could be a YouTube. I like YouTube these days. Wherever you get the content, make sure you keep rating and reviewing. Of course, keep those questions coming, too. We do love to hear from you guys out there in the listening audience. So let's see who we're hearing from on the old program today. First off, I'm pleased to say we get a rare double appearance here, once again holding down the MIAX hot seat, Mr. Tom JARCK, the volatility product specialist over there at MIAX. Tom, welcome back to Volatility Views 2 weeks in a row, sir.
Yes, thank you for having me 2 weeks in a row. It's amazing. I guess I did okay last week. Yeah, looking forward to a good show again.
I guess the vol gods have smiled upon you. They've invited you back for a second week in a row, sir. So there we go. Let's see if we can keep the streak alive. And also joining us from deep in the heart of Texas, holding down the Matrix hot seat, This week, none other than Mr. Mark Sebastian from OptionPit.com by way of Carmen Lion Capital. Mr. Meatball, welcome back to the program to you as well, sir.
The vols at night are big and bright, deep in the heart of Texas. Good to see everybody.
I think you're legally obligated to sing that song now, aren't you? Now that you're down there.
I am deep in the heart of Texas. So what else am I going to do?
Put on the 10-gallon hat, get some spurs, some chaps going. It's a whole new look for you down there.
I got a bird on the floor once. That was hilarious. I can tell that story sometime.
Well, there we go. We'll look forward to that story as well. And also joining us today on the program, our guest, Mr. KRIS SIDIAL, the co-CIO over there at the AMBUS Group. KRIS, welcome to Volatility Views.
How's it going, guys? Thank you guys for having me. I'm definitely looking forward to this segment. Should be a fun one.
And KRIS, as we are wont to do with all of our first-timers, why don't you go ahead and give our audience a little bit of an overview of your background in the vol space, as well as what it is you guys do and trade over there at the AMBUS Group.
Yeah, absolutely. So started trading early off in my college days, then had the opportunity to work for one of the individuals who helped started the CBOE directly. He was one of the president of the CBOE Market Makers Association. So he used to go to the gentleman's house directly, and I would learn how to trade options and vol under him. From there, I went to Chimera Securities, where I was on the prop desk for a little while. Then I went to Xanthus Capital Management, small buy-side equity hedge fund. And from there, I went to a large Canadian investment bank, spent about 3.5 years there. Most of my time was on the exotic derivatives and listed options desk. Then my partners and I decided to collectively come together, and we decided to start up the AMBUS Group, which is a volatility arbitrage focused hedge fund. And just going to come straight out, we're more so like math nerds. Everything that we do is more so predicated around chaos theory and, the principles of skew trading and kurtosis trading. So basically, we're focused on special situations in U.S. equities and some of the outlier events that take place on them. Especially during earnings season's a big thing for us.
How are you enjoying GameStop today?
Oh, what's so funny? I know my partner's listening to this. He's going to die laughing. It popped up on our model yesterday, and we were just like, get this thing out of here. We're not going to be trading this. But it just kept popping up. And then we were just like, we just got to take some to the upside because some of the gamma squeeze potential was just absolutely there. So we threw on a little position, and today it's hugely in the money. So it's working well for us. It's always unfortunate because you wish you would have sized more in that case, right?
Yeah, totally. It's always it's no one ever is going to complain about traders are the only people that ever complain about making money. It's amazing.
I know. It's funny because we have this this firm philosophy to always be, cap short Vega and uncapped long Vega, long gamma. And this is one of the plays where we didn't take that because the 10 delta calls were just so expensive. We had to put it on spread. Unfortunate, but that's what it is.
And KRIS, is it primarily single name volatility over there at AMBUS?
Yeah, so we do a different blend of dispersion trading. So, sometimes we're selling the index or ETFs against some of the single names that we're buying wings on. And also we focus on the low yield and the VIX futures term structure. So taking advantage of the contango in the derivatives market.
We talk a little bit about all that fun stuff. So let's get to it with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity perspective. Coming into showtime, we saw most of the major indices taking a little bit of a much-needed, well-deserved break here to end the week in the red, but not terribly. S&P off about 0.25%. NASDAQ, after continuing to rally yesterday, giving up a little bit today, up about a little more of 0.1%. And the Dow is the leader to the dark side today, off not quite 0.5%, about 0.4%. Of course, given what we have in the rearview mirror this week, we are seeing a little bit of contraction out there in the vol space. Spikes come into showtimes at about 21.5. VIX Cash, that puts it down about 1.25 points. VIX Cash was at pretty much the exact same level, about 21.5 as well. It puts it down about 2 points, and dare I say it, looking pretty darn good for my crystal ball prediction. I do believe I was at 21.25. So maybe I'll just take an early victory right now and claim that one. Let's put that feather in that cap right now. Hold on to it for the rest of the show. But right now, spikes and VIX Cash looking pretty good, at least for me, and VVIX at about 113.5. Puts it down about 8 points from where it was this time last week. Let's go back around the horn. Let's start with our guest, KRIS. Sounds like you're watching a lot of different things out there in the volatility landscape this week. So what is lighting up your tape these days from a vol perspective over there at the AMBUS group, sir?
Yeah, so, we're taking a look at 1 month SPX VRP, like on a 1 year look back, that's still trading in like the 80th percentile range, right? So that VRP spread is still significant, I guess, at these levels. Same for like SPX 1 month implied correlation, still kind of trading, right where it was pre-COVID. And what makes this so interesting is you take a look at the call side and put side skew is extremely expensive on a relative level, for us at least, when some of the metrics that we use. More so because, this vol smile is now changing from, it went from a U in the 80s to a hockey stick, and now it's transitioning to a V because everybody's just buying right tail skew, so much upside buying. So, market makers are just raising the vols on call side stuff because they know they get lifted on it. And it's providing a very interesting dynamic. This market's providing a ton of opportunities for some of these gamma squeezes in U.S. equities to the upside, which, we're not really complaining about. We do well. But that's definitely one thing that, we've been noting is the consistent buying in some of these way out the money calls. Also this rotation theme, from tech into value. We're really curious to see how this goes because, as you guys know, you look at the large names that comprise the S&P 500, and they're all large tech, right? Amazon, Apple, Facebook, Google. So if this rotation theme is true, which it's not holding up so well this last week, it creates this interesting reflexivity where you'll have a bid in VIX vols because of the fact that you'll have some of the sell-off from tech names will drag S&P with it, which will reflectively increase a bid in VIX vols. But it's this is why I think what the guys at the MIAX group are doing is so cool, especially with the spikes product. Shout out to those guys over there because I think this is a time, if you're a vol trader, you should always have some sort of diversified way of looking at some of these vol products, because some of them move completely differently and they're impacted differently from little different factors here and there. But for the most part, we've been lean long delta, short Vega on seasonality flows and more so sentiment. Nothing seems to change as of yet right now.
You mentioned some of those gamma squeezy individual names. I have no idea what names you could possibly be referring to. What names are everyone and their mother flocking into calls on? I have no idea. Do any of those names come across your radar? You kind of mentioned some of the potential that creates, obviously, for things like verticals at levels that probably you probably couldn't get if the rest of the masses weren't out there bidding up that call skew. Does any of that stuff, like your Teslas and your Apples, those come across your radar as well?
Yeah. GameStop's obviously, the hot name right now, but there are a couple other names that have this, some of these imbalances. You look at, I think McDonald's, there's been a pretty big buy in McDonald's upside ball. So, people are buying calls there. Also, you look at like Altria, MO, that's another potential imbalance there, and you're looking at this and, there's this influx of call side buying. And you have that name like Altria, which has pretty high short interest. So it creates a reflexivity event, right? You have from a derivative standpoint, and then also from straight Delta One standpoint, where guys are just running long short books that are just short the name. A couple of those names definitely pop up from time to time.
Mr. Beatball, same question for you, sir. Obviously, first off, you mentioned GameStop. We've been talking about that one for a while, mostly in the negative sense. We had our infamous Bed Bath & Beyond versus GameStop poll. It seems like an eternity ago now. It was only a few months ago. Obviously, a lot has happened since now and then. Looks like today a short seller might have gotten hoisted on their own petard out there. Maybe that's what's driving this to the upside. But I know you said you've been watching that for your Little John. So if you've seen the hordes still flocking into GameStop, have at it. And then what else is lighting up your volatility tape out there this week, sir?
Yeah, just like our guest, I was like, get this thing off my screen. There's no way I'm buying calls in GameStop. It's a you know what. And I got to tell you, you mentioned the one that I think is next. Bloodbath and Beyond is probably, I think, watch the option flow. They're primed for a similar move. So two totally different businesses, but at the same time very similar, right? We used to go to stores to get gaming devices, just like we used to go to stores to buy towels. More similar approaches than more similar business models than maybe a lot of people realize. And so I that's what I'm watching. How about this? Plug Power, right? Plug Power was what, $5 2 months ago, something like that. It is now the largest stock in the Russell 2000. What do you think? It's blown by Teladoc, blown by some of the other big names in there. Yeah, the Russell 2000's biggest name is now Plug Power, and that's one that's like I read about. Palantir, which is definitely good on the top 10 for options. That's one that blew up, and then Ford traded like 2 million contracts yesterday. Ford.
Yeah, that one blew my mind. We talked about that on the option block a little bit there. The notion that the habitually sleepy name like Ford can not only topple Tesla, but it may have actually toppled Apple as well, which, I mean, think about that. Ford, this name has struggled to get past $10 reliably for the better part of the last decade. And now, call it what you will, catching a little bit of that Tesla EV love or whatever it might be. All of a sudden, this thing is just blown up, sir. We're living in a crazy time, Mr. Sebastian.
Yeah, we were talking about the fact that maybe, Tesla needed to drop because it was so expensive relative to the other automakers. Well, maybe it's the other way around. Maybe the other automakers need to rally to get things. Actually, in the end, it's going to be both. But, Ford is really interesting. I was looking at yesterday. I'm like, this is the fate of the year. But, it's one where I'd want to short, over a day or two and then be long because it is set up for one of these gamma squeezes, out a few weeks or as it heads into earnings. I think that's one that is primed for that kind of move with what's happened. Palantir's up 13% today, made a huge move. That's a crazy one. And then, it's all over the board. We've got this kind of crazy gamma where, puts are nobody wants puts anymore. Everybody wants calls. And it's a crazy continuation from 2020.
Yeah, you're right. I mean, the single name scene has been just insane. Aside from, we could spend the whole rest of the show just talking about crazy single names, but what's lighting up your tape from an overall vol perspective this week, sir?
Yeah, I actually think we're in the middle of a pretty tectonic shift in volatility. I was looking back over the last, since the November election, and in order for the VIX to drop, we've needed a rally. It's only been able to go up when the market was going up. And if the market stalled, VIX went up. If the market dropped a little bit, VIX went up. If the market dropped a medium amount, VIX exploded. Well, yesterday we ended pretty flat. VIX was down. Previous day, strong market, VIX down. And here we are today, and we're down a little bit, and the VIX is kind of anemic. I'm wondering whether we've got a sub 20 coming in the next couple of days. Really feels that way to me right now. So I think that we could be kind of cycling out of this kind of perpetual 22 to 25 and maybe making 22 a ceiling. And, if that's going to happen, something's got to give with the spread between the Fed future and spikes and the cash. Same thing with VIX. Right, the cash spikes and the cash VIX are trading at what, like over a 3-point spread between the futures. Now, normally, because vol traders are smarter than equity guys, I assume that the VIX future is correct. It doesn't feel that way this time, and I feel like this is a little bit driven by, as our guest said, a little bit of upside equity buying, a little upside call buying, but that future, I really feel like it's lining up for a little bit of a downfall. There's some really appetizing plays in February options in the spikes in VIX to capture some contango that you don't normally see. And so I'm definitely playing around with put spreads and put butterflies in the VIX and the spikes today.
Interesting. So perhaps the pandemic regime of volatility coming to an end, getting back sub 20. That's a level we haven't seen out there in VIX and spikes since pretty much February of last year. And we all know what happened last February, listeners. So interesting. People have been wondering for a while what it would take for it to break the 20 handle. They thought maybe the inauguration was it, but apparently, at least so far, not so much. Tom, we laid out a lot of groundwork out there, a lot of areas to cover. What is lighting up your tape out there from a vol perspective this week? And do you agree with that supposition by Mr. Meatball there that perhaps we're due for a bit of a regime change in the vol space, sir?
Yeah, I'll get to that part in a second. But first, I want to say, Mark, did I hear you tooting your own horn about calling the spikes and VIX level for the week?
Yes, I like to do it early because you never know what's going to happen during the show. We're already trending away from it a little bit.
As a trader, I always have many rules of thumb and superstitions. And one is I never celebrate a victory in a trade until it's closed out and the check clears.
See, on this show, we celebrate victory early and often, whenever possible. So it's a good mindset to embrace.
You know what, Mark? I'm going to go, you know what, just because of your early gloating, I'm going to go buy 50,000 SPOOs and just absolutely tank the VIX.
There you go.
A nice gesture from you to me, sir.
But, I say in general, from a vol perspective, I remember last week we were talking about the slight bid to premiums going into the inauguration, which we deemed a non-volatile event, but there was still a bid, and that was the only kind of thing you could really think about why. Stuff did come off a little bit after, but not all that much. So, to Mark's point, I do feel like the short end has a little bit more to come off. But what's been interesting is it seems like the long dated vols caught quite a bid over the week, and I just think with all the new, there's a lot of uncertainty, right? Going ahead to new regime of government, you have. I think people are focusing once again on the COVID and just, there's just a lot of, nervousness around that going forward. So, I was looking at some of the December options in Spiders, SPX, they seem to be up pretty good in vol. I haven't really seen any major trades going through that have, would dominate, which would tell me that that's why it should be up there. So it may just be a remark by everybody, but, I was kind of surprised that, when I looked at the week over week changes. The other thing too, last week I talked a little bit about just the Russell outperformance on the year. I don't know if it was last week or a couple weeks before, but just the Russell outperformance. I think we kind of saw that stall a little bit week over week, and there was a big trade yesterday that hit the tape in IWM. I saw that 50,000 put spreads were bought. Now it was a 10 delta put spread, a little lower in strikes. It was I think the Feb 187, 197. But it's a billion notional type of, I would assume, a hedge based off the open interest. It looked like it was a put spread that was bought. Both those open interests popped the next day, so it looked like a new trade. So maybe somebody was listening. I don't know. What else was there? I think we have this Mega Millions, $1 billion. You got to play some lottery tickets for the weekend. Never hurts. And you guys talked on GameStop already. Implied correlation. I know KRIS mentioned it too. It still seems, on this lower end with, we're still in earnings seasons, but, that just tells me these single stock vols must be, pretty rich relative to index at this point. But, I'll leave it at that. I can fill in anywhere along the way if you want.
Hey, Mega Millions, when it hits $1 billion, right? That's when the expected value is. It suddenly makes your eyeballs perk up a little bit. We're talking futures in a second here. Let's kick things off in Spikes futures land. I know they've been listed for a little over a month now over there in MJX land. Tom, anything of note coming across the tape over there in Spikes futures? And I know it's not quite available yet to the public, but I know the Viking /V Spikes is lurking out there. Any updates on that or any interesting developments out there as well you want to share, sir?
I'll say on the V Spikes, it's lurking. We could talk about that.
It's not called the V Spikes. It's called the Viking. On this show, it is called the Viking. I cannot believe you guys passed on that for a name branding. That would have been incredible.
Got to talk to the branding specialists over there, sir.
Yeah, you need to fire your marketing people. and hire me. Viking
so for
rules.
listeners that aren't aware of what that is, it's something that is based on the spike volatility surface, and it gives a measurement of vol. But it's too early to really be talking about it. I know Shelley hinted about it a while back, and but yeah, we'll get into that when it's listed, or just before we can show the not listed, but before the index is publishing. And we'll get into that definitely. As far as the futures go, I mean the bid offer spreads are looking good. They're tight. The contract sizes, it's decent. There hasn't been a lot of volume in the last week. The week before we had a little more, I think, and it's still a work in progress. There's a lot of communication going on with a lot of market liquidity providers, as well as the end users. So it's going well.
And let's see what's going on out there in the VIX futures land. We've been saying for a while, listeners, that shape is, I think the technical term is strange. Bit of a plateau. Obviously, the cash was bouncing around pretty crazy last week. A little bit of juice in that cash. It has now settled down. Of course, the Jan future has rolled off the board as well. So coming into today's show, we saw your nice usual chasm there between the Feb future and the cash. A little over 3 points, about 3.25 points. That puts it pretty much about almost 2 points wider than what it was this time last week as that cash has settled down. March future getting up there now. It's getting a little steeper in that front portion of the curve because it's about 5 points from the cash to the March future. That puts it about double what it was this time last week. Then, if you've been listening to the show, once you get much beyond March into April, it kind of settles out. It's a little bit higher than it was. It was settling out around 26 and change. Now it seems like all the futures after April are hovering around that 27 and change level. But it is this interesting plateau. KRIS, this is something we've been talking about on the show for a while here, this strange, almost plateau shape to the VIX futures term structure. Has this come across your radar as well? And, what are your thoughts about how the VIX futures structure is shaping up out there this week, sir?
Yeah, absolutely. So it's funny that I spoke about this same thing on another podcast, taking a look at.
I believe you're mistaken. There are no other podcasts but this one, sir.
Well, taking a look at F4 through F7, that's been in heavy backwardation for one of the longest time periods in about, I want to say 8 years. I don't have the chart in front of me. But it's really interesting because that contango is not picking up in those backdated VIX futures contracts. And I think that's more so indicative of the sentiment that's actually out there on the street. It's seeming like there is still a sense of fear out there. I mean, the way how some of the front month stuff has been acting has just, it's felt very springy over the last month too. Like you guys were talking about, market falls a little bit and, some of the ETPs just start bouncing up based on the way the futures are trading. Market falls medium size and then, these ETPs are big because of the way how the futures are moving. But yeah, I think some of the backdated stuff, in order to really have a good gauge of where complacency is, you probably want to see that get into a little heavier range.
Yeah, KRIS, I don't know if you ever look at VXY, which is the 4 to 7 month ETP, but that's one I've been studying pretty hard. And I think, if we do get some normalization, VXY, which has been really, really firm, it's not kind of taking the same dive that VXX has. It could absolutely get torched in a short period of time. I don't know if you play with that one at all, but it's one that's been on my radar.
Yeah, I absolutely agree. And, I think this just comes with time too, because I think the way how people are looking at risk based on the fact that this crash was so hard and, it feels like it was just a few months ago, but, we're talking about almost a year ago. It's still resonating in people's heads. So I think really the key, when you see that break, that will be more so indicative of where complacency and where sentiment really is.
And Mr. Meatball, I know you've been watching this term structure out here for a while. Have you just come to accept this strange plateau shape out there? And what else is coming across your radar from a VIX future structure this week, sir?
So this is fun. I'm speaking at a conference in India tomorrow, and I have to get up at 6 in the morning on a Saturday. Awesome. to speak there, but I do you know where the VIX was, and do you know where the VIX was this time 1 year ago without cheating?
I still hadn't broken into even the 20s. It was around a 12 to 13, I believe.
Yeah, it was 12, and the February future at the time.
There you go. See, it's like I host a show about this stuff or something.
Yeah, nice work. Yeah, it was about 12:30, and the Feb future closed today 1 year ago at 15. And I remember being on the show and and saying, that spread is really, really wide. It's kind of crazy that it's, that we've got this ginormous spread between the Feb future and the cash index. I was like, Feb's overpriced. Boy, was I wrong on that. Feb was cheap. That $15, I would buy as many of those Feb 2020 $15 futures as I could right now. To Chris's point, I wrote up an article last week. I said, the back end of the VIX curve is planking, is what I said, because it looks, but at a certain point, I don't know if you've ever planked, Mark, but it is very tiring.
I'm doing it right now as we speak. I'm multitasking.
Well, that's why you're so svelte. As we, you can only plank for so long, and eventually it's going to have to give in if we stay here. I think that, I think that middle of the curve will eventually fall, but I think for that to happen, we need the VIX to get back in sub 20. And I can tell you, SIBO and the MIAX guys are, they'll never admit it, but they're totally rooting for the VIX to get back to 12 so that the call buyers come back. Because right now is in puts. And I know we'll get in VIX and spikes is in puts because everybody's playing for it to drop. There's actually a gamma squeeze set up around the VIX 21 puts where, if we see the VIX get pushed sub 20 toward 19, you could see the futures take a dive quickly because there's 350,000 open contracts on the 21 puts right now. So, and meanwhile, there's no calls open. You have to go to the 50 calls before you get to 100,000, before you get to 100,000 anywhere in February. So there's a ton at the 22s, the 21s, and then short at 18. So I think we've got some real potential for downside if we do get a push lower.
All right, let's see. Let's mention the options. Let's see what's up from an options perspective today. Coming at showtime. Spikes options. Let's break down the top positions out there. Let's go to the top 5 out here. Number 5, the March 30s. Number 4, we got the Feb 11s. Interesting strike there. Then we got our big three-way still dominating the top 3 there. The February 32 half, 40 vertical 1,000 times versus the Feb 29 puts. That's still dominating the top of our spikes tape. Pay attention to that one. Might be interesting to watch and see how that one unfolds. Of course, this time a year ago, back in spikes land, back when everything was still hunky-dory, or not quite hunky-dory, but much calmer than it has been for most of the rest of 2020. We saw that size 1x2 up there in spikes, and it worked out pretty well. So we'll pay attention to this one and see if this one has a similar trajectory. And let's look here now. VIX land, kind of a quiet day on the VIX options front. Only 171,000 contracts on the tape today. The ADV has ticked up again, though. Ticked up about 14,000 contracts. It's up to about 474 now. So, it kind of got anemic there for a little while. Was threatening to break 300,000 not too long ago, but it's been north of 400 for a little while out here now. Let's break down the top 10 hot open positions out here in VIX land. Only cost you 130,000 contracts to break into the top 10 in VIX land. That's not a lot. So obviously some paper has rolled off the board, and also the ADV is still kind of anemic. 130,000 contracts that gets you to the first of only 2 calls in the entire top 10, listeners. So I guess it depends how you look at it. It's double what it was last week. There's only 1. So that could be a sign. But still not a lot of calls out there in VIX land, which again, if you know anything about VIX, been listening to this show for a while, that's kind of weird. 138,000, that's the Feb 50 calls. Number 9, $1.31 of the Feb 20 puts. Number 8, 138,000 of the Feb 19 puts. Number 7, our second and final call in our top 10. The Feb doubles, the Feb 55s. An interesting strike. What would it take to make those relevant in the conversation again, listeners? Number 6, jump up a little bit, 182,000 now of the March 21 puts. Number 5, $1.86 of the Feb 17 puts. Number 4, 198,000 of the Feb 15 puts, all the way up to number 3 before we break 200K. I guess it's a 222,000 of the Feb 18 puts. Number 7, 233,000. Number 2 of the Feb 17 puts, 233,000 of those bad boys. And number 1 with a bullet, we've got the Feb 21 puts, 348,000. Actually, number 2, that was the March 17 puts, by the way. Not much March on the top 10 either, so only 2 March positions there. So kind of an interesting smattering in our top 10, total of about 6.2 million contracts open, about 3.2 million on the calls and 3 million on the puts. So calls still in the lead, but just barely over. Let's break down some of the top paper. Again, we said not a lot of action out there really today, only 171,000 contracts on the tape as of a few minutes ago. So we break down the top 5. It's not much. Even beyond number 5 is 6,000. So not a lot going on there. Number 1 though today, 27,000 of the Feb 21 puts. Number 2, got some calls lighting it up, 20K of the Feb 60 calls. So if you thought the doubles weren't optimistic enough, we got some Feb 60s on the tape for you today. Number 3, Feb 23 puts, almost 15,000 exactly. Number 4, Feb 22 puts, 13K. And like we said, 6,000 of the Feb 25 calls. Yesterday, a little bit more paper, 407,000 contracts going up. Yesterday, the most active contract, the Feb 22 puts. Talked about those once or twice over the past few weeks. Yesterday did 41,400 contracts. Number 2, the Feb 21 puts, 36,000. Number 3, the Feb 45 calls. So it got some calls sneaking in there. 30,000 almost exactly going up yesterday. Number 4, Feb 35 calls, 26,000. And number 1 with a bullet, or number 5 with a bullet yesterday, was the Feb 19 puts, almost 21,000. The Wednesday was a little bit more active again as well, 526,000 contracts on the tape. Most active contract, once again, a Feb put. This time it was the Feb 21 put for 64,500. Number 2, the Feb 60. So you do have some interesting call strikes sneaking in there in February, 36,000 of those. Number 3, 29,000 of the Feb 25 puts. Number 4, 22,000 of the Feb 40 calls. And round out the top 5 on Wednesday, 22,000 of the Feb 65s. And then Tuesday was the most active day of the week. Obviously, we were closed on Monday for the Martin Luther King holiday there. Tuesday, 672,000 contracts on the tape. Number 1, 34,000 of the Jan 22 puts. Interesting. Those went off the board earlier this week. So someone probably adjusting and closing out some of those bad boys. Number 2, 30,000 of the June. The first June we've seen going up for size really this week. June 40 calls going up 30,000, followed by almost 30,000 of the June 30. So maybe an interesting June vertical out there, about 30,000 times. Number 4 here, we got back again to Jan. Jan going out a couple days ago, 32 halves, 26,000. And round out the top 5 on Tuesday, 23,000 of the Feb 22 puts. I just broke down a lot of paper there, KRIS, but I know you guys watch a lot of different products out there, including all things VIX. Any of these trades come across your radar? And do you guys spend a lot of time watching the VIX options flow out there, KRIS?
Yeah, so we do watch the VIX options flow, but I wouldn't say as extensively as we do with some of the single name stuff. More so, as I was saying at the beginning of the show, we've been looking at some of the skew in some of these places, right? So you'll have some of the trades pop up, and some of the pricing is like, oh man, we don't want to pay, we don't want to shell that out for that. But a couple of things that popped up is some of the calls that printed in McDonald's and also EM. Surprisingly, I think there was a few EM calls on the tape today. Fed 19, 60s. I think that was like 250 million worth of notional. Let me see what else we got here. Oh, Fed 19, 58 calls. So monitoring some of that. Outside of that, some of the other prints weren't really some of the things that popped up on our radar.
Yeah, it was kind of a weird week, I think, to put it mildly out there. Mr. Meatball, we've joked that nobody wants puts, at least out there in the broad equities. People do want some puts in VIX. It's just VIX doesn't seem like it wants to play ball. And there also were some calls popping up, some interesting strikes in February, the doubles and the 60s in particular. So if you want some call strikes, there are a few to be found. Anything coming across your radar in VIX options this week, sir?
Yeah, so the 50s and 55s are actually part of a call spread that went up for some size. So that the 50s and 55s are actually against each other. Really odd call spread to do that far out of the money, only $5 wide. I don't get it, but that's what they did.
Yeah, that doesn't float my boat at all.
Yeah, and the reason, and if you're wondering why the 17s and the 21s are up so big, it's because they've been a part of, the 21s have been a part of a 21-18 put spread that went up 75,000 times, and then another 50. They've also been part of a 21-17 put 1x2 that went up for some size. So there is just a huge, I mean, that is the whale strike right there, right? It is, you know, that's what we would expect. If the VIX is at 12, that would be what we'd expect out of like the 15 or the 20 calls, you know, something like that. But to see puts that have 350 open interest, and, you know, like I've said, the trading issue with VIX is that the call buyers have disappeared, right? There's just about the same amount of put volume that you normally see, maybe even a little bit more. But the call buying has fallen by about a third. So the volume that is missing, because normally you would see calls outpace puts about 1.5 to 1 in the VIX. And currently they're about 1 to 1. That all that volume that's missing is, you know, in VIX, why it's been slow, is from calls. And that will come back. But we need the VIX to get back to a level where, you know, using hedges against the portfolio in using volatility hedges in a portfolio that are static makes more sense than just kind of doing price alpha, buying a bunch of VXX or UVXY, which is what people seem to be doing right now.
You know, we got a little bit of, speaking of volume, we got a little bit maybe of tail wagging the dog out here. VXX is actually putting up some numbers while VIX is kind of languishing. Almost 70,000 contracts more on the tape in VXX right now than VIX. Like I said, VIX was about 170,000. VXX, as of a few minutes ago, has already done 240,000, closing in on its ADV of 273,000, which is in and of itself up about 18,000 from last week. So VXX has been putting up some paper. Before we get to what's trading today, let's look really quickly at our top 10 out there. There are still some calls to be found out there as well, but they are kind of few and far between. Number 10 cost you 18,000 contracts to break into the top 10 in VXX. So like I said, more active today, but still in the OI, you could see a little bit of a different frame of reference in terms of size volume. About 1/10 almost cost you to break into the top 10 in VXX. That gets you to the Jan 12 puts. Number 9, 19,000 of the Jan 25 calls. Number 8, 19,000 as well of the March 13 puts. Number 7, almost 21,000 of the March 16 calls. Number 6, 22K of the Feb 14 puts. Number 5, 24,000 of the Feb 13 puts. Number 4, squeezing in the middle there. We got the Feb 13 half puts for 24,500. Number 3, 25,000 of the Jan 15 puts. Numero dos here, 29, almost 30,000 of the March 16 puts. And the number 1 open position in VXX right now is to the upside, actually. It's 52, almost 53,000 of the March 20 calls. So interesting stuff afoot out there. Like I mentioned, it's doing some paper today. The top 5 most active out there today, 18,500 of the March 40 calls, followed by about same size, about 18,000 and change of the March 20 calls. So perhaps a bit of a wide, interesting vertical out there. Number 3, we got the Jan 16 halves, 12,500. Number 4, March 36s, 12,000, and almost 11,000 of the March 32s, rounding out the top 5 out there. So interesting activity, actually putting up some numbers out there today. Kris, do you pay attention to the world of volatility ETPs? And if so, what are your thoughts on the product everyone loves to fade out there, VXX, sir?
Yeah, so that is absolutely a product that we enjoy trading. We like trading UVXY and VXX. We express our view on the fixed futures term structure through trading the derivatives, so the options directly on these names. As of right now, you know, as I was saying, I think these things have been acting very coiled. You know, like you'll see the market just start to drop a little bit, and these things will be up, 10%, 12%, reacting on the VIX futures. But now that we've rolled through expiration, that that difference in the roll yield is pretty substantial now. I think you'll start to remove that springy action. And I actually think we're going to get back into that range where these things are going to have that leg down and that consistent decay. I honestly think that we're getting ready to get back to that realm where vol isn't as sticky as it's been right now. I think probably in the next month or so, we'll see that. So I think things are going to start moving back to normal. I do think, a VIX and spikes floor could be around 20 or so, but I wouldn't be surprised to see if that's that's an over and under floor. So, we may have a little time under that, and then, it kind of bounces back and sticks around that. But for the most part, I think some of these products they'll probably reverse split soon. So you'll probably have a reverse split, and then I think consistently you'll have these down for probably into Q2. But that's just my thoughts on it.
Yeah, they are approaching that 10 strike, and that's usually where they tend to think about going back up to around 40 or so. Mr. Meatball, you were saying you think maybe we're in for a bit of a regime change out there in VIX land. Does that mean you're getting the fade back on hot and heavy in VXX, sir?
That is definitely a trade that we have put out in Volatility Edge, and yes, it is one that I VXX and VIX and spikes. You name the vol product, and I will fade it right now because there's just so much juice there.
Before we get to your questions and the crystal ball, really quickly, we're talking about single name vol at the top of the show. Obviously, if you guys know where to go for all your earnings, volatility, the move results, move reports, all that good stuff, theoptionsinsider.com. Click on the options, news, and articles tab. You're off to the races. We got new ones hot off the presses for you, courtesy of our friends over there at Oratsland. Had some big names popping off this week, including Netflix on Tuesday, Bank of America, Goldman out there as well, IB, Schwab. Wednesday, we had P&G, Morgan Stanley. So all your financials pretty much are covered by now. BNY Mellon, United Airlines, and Alcoa. Alcoa used to kick things off back in the day. Oh, how the worm has turned out there. Also had Northern Trust and Intel, my old stomping grounds out there on Thursday, as well as IBM. And today we got Ally, our friends over there in Ally Land. We got move results reports for a bunch of these names. Look at a couple really quickly. You got United Airlines here. They were popping off on the 20th. They were at $45.18 coming into their announcement. They were pricing in 4.2%. They actually delivered about 6% to the downside. So a little bit of outperformance. We're starting to see a little bit of that now, some of that sneaking in, listeners, of maybe, like we said, like Mark thinks we're at the inflection point for overall volatility. Maybe we're also at that inflection point for single name vol, where we've been squeezing it as these earnings results have mattered not for the entirety of 2020. And now it's getting to the point where maybe it's going to start widening out a little bit again out there. We've got reports for a lot of these names. Let's see really quickly. I've got IBM and Intel. We don't have time to get into all of these right now. I also have the season report up there as well, so you guys can pay attention and see if that supposition is right. Are we starting to outperform our earnings straddles, or am I just spitting into the wind there? I guess we'll find out soon enough. Speaking of spitting into the wind, that's what the shorts were doing out there in GameStop today. We were talking about this earlier. At the one point we were talking about earlier in the show, it was up over 70%. Got halted very briefly out there. You do have to love when these short sellers kind of just hoist themselves on their own petard. At one point, GameStop was the most shorted stock in the overall market out there, including in terms of percentage of short interest. 138% of its stock was short. Hence this insane move that we're seeing out there right now. So fascinating stuff, but we got to get to you folks now. It's time for a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. We got an easy one right off the bat here. It comes from Mr. Timms. He wants to know why you call this segment the Vol voicemail. Well, that goes back, I've said this before, it goes back to the primordial ooze days of this show, which is coming up on nigh a decade now, listen, which is crazy. But in that early time we had a vol number. I think they still say it in the transition to this segment. We don't really check it anymore, but we put it out there. We thought it'd be fun for folks to call in with their vol questions. We quickly realized folks are a little bit intimidated to leave their voice and have it be played on the air. They'll send in questions every other way, no problem, but to hear their own voice, that kind of scares people. But we kept the name because it just kind of sounds fun. So yeah, that's why we call it the vol voicemail. All right, Tom, we got a question here for you from Ainsley. Ainsley wants to know, do you expect there to be a robust ARB trade between Spikes futures and VOLQ futures, aka the NASDAQ at the money vol futures there? Or will the disparate nature of the products make that difficult? Interesting question. Obviously, both futures have just kind of kicked off recently, Tom, so it's still early days, but I think he wants to know, obviously, one's straight at the money, one is Spikes, which incorporates the skew. What are your thoughts on the potential for a, as he puts it, a robust ARB trade between the Spikes futures and the VOLQ futures, sir?
Yeah, well, I would say this. I think there's a much more direct ARB between Spikes futures and VIX futures. But if you're looking to play some relative value vol scenarios, now keep in mind as it's mentioned in there, they're very different calculations and they're computed very differently. So whereas the VOLQ is more of an at the money vol and the Spikes represents more of a variance swap replication. So just, obviously be cautious with that, but it could well evolve into something where folks can, whether it's they're doing some kind of a view on that, or it's dealer desks or somebody just trying to lay off some risk between the two. You could definitely see some of that happening. Yes.
All right, we got time I think for one more before we go in to the most difficult, the most dangerous part. Chris, I hope they prepped you for the crystal ball because it gets a little ugly in there. All right, last up here, we got time for Nix. Nix wants to know kind of the theme we've been talking about all week, certainly on the show today. WTF is up with VIX? Why can't it break 20? Well, Mr. Meatball, this is kind of right up your alley because you've been saying all show. In fact, I can probably guess where your crystal ball pick is going to be already, but we'll get there in a second. What do you have to say here for Nix? He sounds like he kind of agrees with you. What's up with VIX? Why can't it break 20? Should you tell him maybe stay tuned?
Yes, stay tuned. It's going to break 20. And to the other point, I actually think that there's a really interesting relationship to the previous question between VOLQ and Spikes in and around earnings. I think that there's a lot of opportunity to take advantage of, some of the crazy vols you see in the NASDAQ stocks relative to kind of the balance of the market. And there's some really interesting opportunities are between the two on, based on events, not so much on relative value is going to be event based, not just, hey, this one's expensive and this one's not.
All right. Now it's time to see how well we fared. It is time for the crystal ball, listeners.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. You know what time it is. Time to get crazy. Time to wrestle with the vol gods and see what they have in store for the coming week. And it looks like I didn't need to declare victory at the top of the show because the vol gods are still smiling upon me. We saw a little bit of a drift higher throughout the show, but they've come back down pretty much to exactly where we were at the start of the show. Both Spikes and VIX Cash right around that 21.5 level. I was at a 21.25 in my prediction. Mr. Rock Lobster, he got mad. He said I took his spots. He went a little bit lower. He went 20.99. And Tom was feeling the upside last week. He was feeling a 24. So that puts me a quarter of a point away on both Spikes and VIX. Not quite within our 10th of a point bullseye, but back-to-back weeks, pretty darn close. Not too bad. I'm pretty much a bullseye last week and pretty darn close this week. All right, that means I get to go first, or I get to choose who goes first. And you know what? I'll be a charitable victor. 2 weeks in a row here. I can't just claim the first spot every time, even though I have earned it. I should take my winnings and go. But I'll be nice. I'll allow our guest to go first because you never got a chance to play this game before. Chris, it's a dangerous game. We need you to go out now and prognosticate where VIX Cash and or Spikes will be, not at the close next week, but this time, the end of the show, this time next week, Chris. So what do you have for our listeners, sir?
All right, let's see what we got here. So again, when I came into the show, I was saying we're more so lean, positive delta, short Vega. That's how the book is looking right now. So I'm going to stick with that. I think the sentiment remains bullish. I'm actually going to say that there's a little bit of a deflation in VIX and Spike. I'm going to go like 2050.
20.5. Okay. 2050 for you. All right. And then Mr. Meatball, I'll be nice too, because you weren't on the show, but you get to share in the ignominy of your partner's loss there. But I'll be charitable. I'll let you go next. Mr. Meatball, sir, I got a feeling you're going to say shy of the 20 handle. Am I correct, sir? What are you feeling for next week?
Chris and I have a lot in common in that our outlook is our position. So I'm going to go with a 1919. I'm looking for a full-on tank job.
1919, back to those levels we haven't seen in nigh on a year out there in VIX land, all the way back to the pre-February 20th days. At this point, I might as well just go last. I'll be charitable. So, Tom, have at it. You get another swing at the bat this week. You were feeling a little bit of gusto last week. Are you feeling the same, or are you feeling a little bit, as Mr. Meatball calls it, the tank job, sir?
I would say, I'm normally a bearish on vol almost always. So last week was an anomaly probably, but I'm in the same camp with these fine individuals. I'm going to be a 19. Actually, I'm going to 20 and a quarter on the VIX and the spikes. 20 and a quarter. All right. So I've set up a fun scenario to myself, because I was going to feel a little bit less next week as well. So far, we got Chris holding the top spot at 20.5, Tom at 20 and a quarter, Mr. Meatball feeling the aggressive fade at 19.19. I was at 21 and a quarter last week. We're at 21.5 right now, pretty much in both of those indices, listeners. I kind of like where Chris is hanging his hat out next week. I feel a little bit of erosion, but not a ton. I'm not feeling what the Meatball is putting down there. So I'm gonna be charitable to our guest and give him a little bit of distance, and I'm gonna go a little bit north of him at 20.75. So about a half a point erosion from my prognostication last week. So there's your market, listeners, for vol this time next week. Mr. Meatball at the bottom there, 19.19. Tom right behind him at 20 and a quarter. Chris at 20.5, and myself, remember, 2 weeks in a row now, listeners. Let's see if we can go for 3 at 20.75. All right. Unfortunately, that music means we've come to the end of another epic journey through the world of all things volatility. But before we go, let's go back around the horn, see what everyone is up to that may interest you. Chris, we'll start with you as our guest, sir. You did an able job in the hot seat today. If folks are intrigued, they want to learn more about what you guys are up to over there at the AMBUS group, where should they go? What should they do?
Yeah, so you guys can reach us at www.theambusgroup.com, or you can follow me on Twitter at KSIDIII. So AMBUSgroup.com or Twitter, KSIDIII.
That's AMBUS Group, AMBUS, listeners, is how you find that. And Tom, if folks are intrigued, they want to learn more about all this action out there in Spikes land, the options, the futures, where should they go? What should they do, sir?
Yeah, you can go to the MIAX website, which is miaxoptions.com/spikes. Be sure to check out the website. It's been somewhat redesigned in the last month. Cool little videos in there about spikes, as well as we put together a really, really handy resource guide, which I think is very, very informative.
There you go. miaxoptions.com/spikes is the place to go. You get the data, you get the charts, you get the press releases for all that new stuff they're coming out with. Also, a link to a pretty cool show called Volatility Views. What more can you ask for from a volatility destination? And you know where to go if you want to find out more about the folks over there at Matrix. It's just matrixexecutions.com to learn more about their execution services and trading technology. And on behalf of the folks over there at Matrix and Tom and everybody over there in Spikes Land and the Greasy Meatball and our guest Chris and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing. Remember, we're back again on Monday, kicking it all off with the option block. No holidays this week, so you get a full week out of us all the way through till Friday and another episode of Volatility Views.
Volatility Views is brought to you by MIAX. one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.